Thank you. Backing big bets in uncertain times, both like high risk, ominous tone to it. So that's how we're going to kick off our morning, I think. I wanted to ask you really what the mood is right now in the investment community. Mark, I want to kick it off with you. Because we are in the grander tech sector, it's a lot about uncertain economic times, headwinds, as a result, cutbacks. But what are you seeing on the ground level, and what is your mood and the mood in the investment community around space investing?
So we produce a publication every quarter called the Seraphim Space Index. And that looks at all of the private investment into the space domain globally. And when we slice and dice that to get the trends out of it. So the figures to the 30th of September, the most recent figures, show that this year is actually as high as 2021. So 12.2 billion invested. So what we're seeing as you dig down into that is that for seed and Series A, we're seeing significant numbers of increases of investments during the course of the last year. Whereas if you look at Series C, D, and beyond, it's flatlining, but actually the amount and volume of money that's being invested is declining. So that is reflecting both our mood and what we're actually doing as an organization. So we've stepped up our investments at the seed stage. So we're making about an investment a month in that area. You know, investing at the bottom of the economic cycle is the best time to be making outsized returns, and we're aware of that. But when we're also investing out of our growth fund, we're now writing smaller checks. We're trying to continue with the momentum, but we're actually writing smaller checks into the companies that we're invested into. So
at the not at the Series C level, though, at a different.
Yeah, so we're investing more heavily at seed,
okay.
But we're also continuing to invest in C series, and we've written a number of checks during the course of this year. But those checks are perhaps a quarter of the size we would have written last year.
Emily, you have focused more on early stage, which sounds like, based on the Seraphim report, maybe where there's a lot of activity. So are you seeing the same level of activity as maybe 2021, which, you know, there was a lot, it was almost like hyperactive activity in the investment world?
Yeah, I definitely, 2022, at the very early stages, we are still seeing a lot of activity. We're talking to a lot of space companies and in other sectors as well. And to Mark's point, like, I think the risks that we're seeing are just downstream financing risk, and it's something that, you know, when we're evaluating these early stage companies, we're taking that into account when we're thinking about, you know, how this company will then be able to go and raise follow-on rounds. But yeah, there's I have not really seen a significant slowdown at the early stages. People are still launching, like there's still a lot of opportunity in space, and so I think the early stage markets have reflected that.
Jory, what's your sentiment like at Playground, but also what you're seeing, and are you following a totally different investment strategy or something more similar to what Mark's doing?
So I think for us, space is the challenge with space investing for us and for me is always to find companies and sectors that have the potential for multi-billion-dollar outcomes. And I don't feel like that's changed from before, you know, from a year or two ago to now. I think there is going to be more emphasis on, you know, how quickly can you get revenue, and, you know, just how can you build into your plan the restrictions that you might face on later stage financing, whether it's equity or credit financing that people have relied on, especially for big CapEx projects.
I want to pull that thread a little bit, because that to me seems like the most difficult part of investing, particularly in space, but any kind of frontier tech, which is it tends to be a low to zero revenue game for a long time. And so, Jory, to start with you, what is it that you're looking at? Maybe what you're looking at differently now when you have maybe an early stage or Series A company coming to you to identify really, like, obviously the risk reward, but that revenue potential, especially in this economic situation right now.
So I don't think the basic framework has changed. We definitely like to see companies at the very earliest stages have engagements with customers, who can articulate why they want this thing, how much they would pay for this thing. I'll encourage seed companies, seed stage CEOs and founders to get even non-binding LOIs that are referenceable and articulate the need for that product at that early stage will be persuasive to the investors now. And usually those translate over time into kind of the company's willingness and kind of building out the go-to-market from the very earliest stages. So it's not just a science project, it's not just a technology play, they're building a business from the beginning.
Mark, what about you? I mean, your company exclusively invests in space and has for a while. Has your strategy in terms of identifying that potential for revenue changed based on the economic headwinds that we're seeing?
No, it hasn't changed. We're still really focused on backing people. So that's what our focus is at every single stage. So on the earlier stage, when we're first meeting with an entrepreneur that has got little more than a business plan, it's about their ability to be able to convince us of the size of the addressable market, how they're going to do that. Their passion needs to be measurable. Their understanding of the competition and how they fit in. They need to have done their homework, and actually where we learn something from the meeting. And so it really becomes very obvious when an entrepreneur walks in the room and they've got an amazing plan that they've thoroughly thought through, they understand where it fits in the market, and we're then ready to invest them. So we also run an accelerator program, which is a great model because what it enables us to be able to do when we've met an entrepreneur like the type I just described, we then put them onto a 3-month accelerator. And during that period of time, they get to develop their business, they get to meet a lot of potential corporate partners, potential other investors, and it's over a 3-month period. So that really gets to help you to sort of evaluate an opportunity over a period of time. So often with a seed round investment, there's quite a rush to make that investment. You only end up actually meeting the entrepreneur for, I don't know how many hours. But doing that over months, we find that gives us a lot more conviction. So we've got conviction about the individuals, what they're going to do, and delivering against that. And really, it's exactly the same really when we look at B series and C series stage businesses. Then it's about, has the individual, the leadership team got the capability of hiring and retaining the right staff, convincing other investors about their huge plans that they're going to go down. So they've got to convince us on that. So no, it really hasn't changed.
What about on the technical side of things? Is there maybe not an aversion or a risk aversion, but just a little bit more due diligence than you have done in the past on the technical side of things due to, you always want to make sure that you're putting good money into good companies that are going to grow, but because of sort of what's been happening in the economy, are you taking extra steps on the technical side of things to vet companies?
No is the answer to that question, really. It's not really about the technology. Technology is right down the list as far as we're concerned. We take it as read that it's going to be successful, and rarely is the problem of a business relating to the technology. It's always about the people. So what we're more interested in is about their ability to be able to sign contracts with customers, get funding through governments, and still making progress despite the macro headwinds that are underway. And we've got some businesses that are doing incredibly well despite the macroeconomic backdrop, and those are the companies that we're supporting.
Emily, would you agree with that take? I mean, you have a technical background, so I'm wondering what your thoughts are on that.
Yeah, I mean, I would agree that my level of diligence, both technical and on the market, it hasn't changed because of the market. I will say, just speaking more broadly, as an investor in space, I think one thing the market has changed a bit is, when you're doing your technical diligence, I think it's more important than ever that a company that you're backing has a very clear technical differentiator and advantage. And I do think, over the last couple of years, there have been hundreds and hundreds of space companies raising money, and I think any company with downstream financing risk, especially ones with a lot of capital requirements, like this is going to be it could be a challenging time. And I think what we might see, what I'm expecting, is the companies that have the true, technical differentiator or the real something that gives them advantage over the competitors. Those we're really going to start to see that those companies rise above, and I think we might see a bit of a filtering out of those companies that really have that true technical strength.
I see Jory nodding his head along.
Technical and market strength. Yeah,
yes.
I keep wanting to talk about the market. I would disagree with Mark that for us it is that technology is the top for us, and then all those other things are important, but it's not down the list ever. And we do spend frequently months on the space investments we have made. We did months of due diligence, not exclusively, but a lot of work on the technology, and we do want differentiated technology. I will say that the filtering is definitely true. We have a couple of now slightly later stage space tech companies in our portfolio. These companies have billions of dollars of binding contracts for pre-sales. People want to fund that still. And so you need the technical execution for sure, but the customers are going to filter whether they accept that technical differentiation and the market differentiation, and that should be instantiated in binding contracts, and that will get you later stage funding.
Okay.
Well, one of the things that I've found interesting during the course of this year is investors' appetite for risk seems to have actually gone up. The types of companies that are getting funded are those that have got the most audacious plans. Investors seem to sort of take a little bit more comfort in investing into a business that's so many years away from revenue that the current macro environment kind of doesn't really matter. And what we're seeing is a lot of those type of businesses are actually accessing funding during this stage of the cycle. So a lot of sort of cis-lunar type businesses and lots of technologies that need to be developed with a market that is uncertain. Those companies are still successfully raising their seed rounds and some are successfully raising their A series as well.
Have you ever seen that type of, human behavior approach to investing in the past where the risk aversion is maybe not matching up with the more short-term macroeconomic situation? Is this new to you?
Yeah, this is new to me. I mean, I think it's great, but not something that I've seen before. I think investors are I think these are investors that perhaps have come down to investing in earlier stage where they'd be more traditionally investing in later stage A, B, C, and just putting some bread on the water on companies that have potential moonshot capability. As they come around and do their A series, B series, then they can step up.
Jory, do you have any insight? I mean, are you seeing that same thing? And do you have any insight as to why that's happening? Like, what's happening in our world that's fueling this, willingness to really go for these moonshots without any revenue potential for a while?
Well, I think, there's definitely the thought that never let a good recession go to waste in terms of investing. A lot of really breakthrough companies and ideas, transformative companies and ideas, come from these difficult times, both because people are maybe leaving large companies and starting things at this time. So there's a new input of entrepreneurs into this system, and I think we're also following on. We're post-COVID, so there's a lot of transitions in people's lives, looking kind of what are they going to do with their lives. They want to make a difference, and there's a lot of transition in the geopolitical environment, and I think space technologies have been very prominent and at the forefront of that, and it looks like an area that will be growing in a secular fashion regardless of kind of the speed bumps in the economy, and I think a lot of people are excited about that and want to figure out where the technologies and businesses are going to be and be a part of that. So.
Emily, you're kind of part of that ecosystem in a way because you were at SpaceX, and I've seen that happen. I can't even count on both hands the number of startups that have been born out of people who have left SpaceX.
Yeah, absolutely. I think definitely SpaceX has created this resurgence of just interest and inspiration in space, and I think a lot, exactly what Jory's saying, a lot of the engineers that I worked with are, some of them are leaving and they're wanting to work on the most interesting technical challenges. And to them, that is exploring Mars, building habitats on the moon, asteroid, like they're interested in the most interesting technical problems. And I think, you know, even though the markets are like changing, there are a lot of VCs raised a lot of money in the last couple of years, and so there's dry powder and talent, and so I think that's part of the reason we're seeing a lot of these, you know, very frontier tech opportunities in space. And from a government, like Jory touched on the like geopolitical situation, and I think there's definitely the government has a lot of interest in supporting these companies and continue to support these companies through large contracts that I think do play a large role in, you know, allowing these companies to continue the R&D efforts without any revenue in like the next few years. So I think that's part of the reason we're seeing a lot of this right now.
I mean, I was going to ask whether like the Department of Defense or government in general is seen as like a safe haven, but it sounds like actually that there's a lot of investment activity happening anyway. So I'm wondering what your thoughts are on going into 2023, if you see it shifting more towards, because of increased support from the government, that becoming actually a safe haven, or if you're anticipating kind of what we saw in 2021 and 2022. So still very active VC community.
Yeah, I mean, I don't think government funding is a silver bullet at all, like by any means. But I do think it's pretty important for companies where there's significant technical risk and maybe the business case isn't immediately there within the next, 5 to 10 years. I think government funding, it might be a saving grace, even with a lot of venture capital funding. But I don't think it is for every company, and like I said, I don't think it's a silver bullet. And there needs to be, private funding as well, a path to strong economics in the future.
I think it's giving confidence to investors.
Yeah.
It's very clear that there's significant government funding coming from different governments around the world, and they're really clear about where it's being invested. And really, the focus is on trying to encourage commercial companies to achieve the government aims. So you know that there's a customer, you know that it's a long-term opportunity, but ultimately it could turn into a large commercial opportunity. So, I mean, a great example is effectively NASA funding the private space station market. So we've just invested into Voyager, one of those companies. There's no way in the world we would have made that investment if NASA wasn't stuck behind with hundreds of millions of dollars to make this market a reality. But on the back of that, massive amounts of commercial potential partners and customers have come to the market. It's the creation of a market. And I think that we're seeing this in a whole range of different areas across the entire space tech domain. So investors are seeing this happening, and they're investing into these companies that are audacious and high risk, but there's something behind that. They're not just taking blind risks. There's government funding that I think is giving that confidence.
I mean, I think governments, and especially the U.S. government, have really gotten smarter about engaging with private companies and even startups at very early stages in ways that don't disrupt their commercial aspirations and their commercial paths, where that was previously, years ago, that I felt like that was a problem where you'd really have to weigh, well, the government wants one thing and the commercial market wants another, and there's this conflict. And now I think the government has seen, especially with like commercial crew and commercial cargo in the United States, the benefits of riding on the commercial opportunity and the speed with which and the effectiveness with which private companies in that model can succeed, and that's being additive instead of a distraction now.
That's interesting because oftentimes, government and government funding, you really think of bureaucracy and slow moving, but it sounds like maybe there's a little bit more flexibility.
And they're willing to be an early and relatively easy customer in some cases, especially in these like hyper-technical space areas where that first customer may be challenging, and they're willing to take a risk, and they're trying to help nurture a technology that they know they want to exist, and they're willing to kind of do that without changing its course in a government-specific manner.
In Europe, just to build on that, in Europe, I think they're doing something that takes it one step further. So the European Commission have decided that they want more space. they want to finance more space. So what they've actually done is they've given a budget of 600 million euros to the European Investment Fund to actually invest into funds, the venture funds, that are focused on space. So they'll only provide around 25% of whatever the fund size is. So they're actually leveraging another 75% into the space market. But they're not giving any requirements as what's required. They're leaving the fund managers to select the right teams that have got the right technologies to grow the space environment. So, I mean, that is massive. That is really government as an investor, but stepping back and leaving it to the private market to decide which areas that they should invest into.
Well, it's surprising that there aren't, I'm sure that there are some basic parameters, but it sounds like it's very loosely defined, which to me is very highly unusual. Like, I don't see that really coming from a government fund very often.
Yeah, that's why I bring it out. So there's 2.4 billion that's going to be invested into the space market through this project during the course of the next 3 years.
It sounds like there's still, on the investment side of things, a lot of bullishness, maybe some tweaks here and there, but I'm wondering what the sentiment is from the startups that you're talking to and advising. And Emily, I want to kick it off with you. In the world that I often live in, which is frontier tech but autonomous vehicles, we saw a lot of funding happen in 2021, a lot of hiring, and in late 2022, a lot of layoffs and cuts as a result of kind of shoring up and protecting themselves to make sure they can extend their runway on a frontier tech that doesn't really have any promise of revenue for a long time. Are you seeing the same thing happening, or do you anticipate the same thing happening with this space startups, especially on the early stage, like up to Series B side of things?
To be honest, so my exposure is at the very early stage, like the seed and Series A companies are the ones I'm talking to. I have not actually been seeing a ton. Like, there's definitely been conversations about extending runway and how to think about the next financing. I've yet to see a lot of layoffs. It might be different at the later stage that these guys have exposure to, but the companies that I'm having conversations with, that is not something I've experienced seeing.
Jory, what are you seeing on the later stages?
Well, I mean, I think there's sectors where there's going to be a lot of companies that are going to have to close, right? They've just been overinvested. There were never going to be 143 or whatever launch companies. And so I think that will accelerate in this market where there's going to be less speculative money and it's going to be more tied to kind of, how mature is this technology and how do the customers view it and what is their customer traction? And so I think there'll be a lot of fallout there. I mean, I think the kind of so-called flight to quality is just going to be very concrete with the companies that are kind of more advanced in technical development, have better product market fit, and have customer contracts to demonstrate that. Again, they'll be able to get later stage funding, and a lot of these other ones won't, I'm afraid. So.
Yeah, I think the existing shareholders play an important role here. So if the internal shareholders are stepping up to provide the company with the minimum funding that it requires in order to achieve its goals, then that's another signal to external investors that this is one of the companies that's worth supporting. I think where it all starts to go wrong is if the existing shareholders aren't able or don't want to step up in this particular company. And I think that we're going to start seeing a lot more of that during the course of the next year ahead.
But I think it's one thing that I'll add is that I think it's really challenging for a lot of these companies that are Series B and beyond to slow down and try to just save money to ride it out, because the customers are demanding delivery of their products and services. And so you have a chicken and egg. If you slow down and you miss those dates, then you're going to lose those customers, and now you're just going to die a slower, different death. So I think it's going to have to be companies that have technology and customers. They need to execute, and they're going to be able to get the capital, or there's going to be a lot of triaging of ones that aren't able to be that.
Yeah, I think looking across our portfolio, companies are being cautious during the course of this year. They are pulling back on hiring new heads where they can. But for the points that Josh just made there, Jory just made there, that actually they're on a path. They need to make deliveries, and therefore, they need to largely stick to their original plans.
When, for each of you, I'd like you to address this. You had mentioned, Jory, at one point consolidation, with launch companies.
Well, consolidation makes it sound like they're maybe joining together. I think it's going to be more triaging than consolidation. But.
So when you look at those areas that might be oversaturated right now, before we move on to the exciting stuff that you're looking at, but when you look at the ones in 2023 and maybe 2024 areas beyond launch, are there any other areas within space that you see probably going through some really big changes, meaning a lot of startups folding, maybe some mergers, maybe some, maybe some acqui-hires, but big changes in terms of just because it is oversaturated?
So there's obviously been a lot of money gone into the constellation businesses. And there are many different types of constellation businesses, but just to sort of focus on one area, IoT. So this is a very, very competitive area. So there are far too many companies trying to focus on that market, including a significant number of established companies that have got significant resource. So I do expect to see casualties in that market. And I think because of the sort of specialist nature of each of these different types of companies, we're not going to see them being acquired or merging with each other. I think we're just going to see failure. Because they're going to have a challenge going back to their existing shareholders and really making the case as to why they should continue to provide them funding for the next round. So I think there are sort of subsectors like that that I think are going to see significant consolidation during the course of the year.
Emily?
Yeah, I would agree with that. I think another example would like the launch vehicle market. I've chatted with hundreds of launch vehicle companies, and it's a $20 billion market right now. There will be clear winners. Like there will be companies that are very successful. I think there are currently too many probably companies in the space, and so I agree with you on the constellation point. I think launch vehicles is another example. But like I said earlier, I think it's really those companies that have that true competitive advantage, that true technical differentiator, the market differentiator, those are really the ones we're going to see rise to the top this year, which I'm personally very excited about. So,
Jory, was there anything else you want to add on that?
I mean, I could see there being some actual consolidation in areas like Earth observation and on-orbit propulsion, where the markets or the companies and the markets they're serving tend to be a little more segmented by the particular technology, and maybe they have a real business, but it's not a scaled business. And so now there'll be an opportunity as they mature to maybe combine some of those together and get a scaled business out of what are individually successful but not scaled approaches.
I want to wrap up by getting your thoughts on what actually excites you. And maybe even get really specific. Emily, I'll kick it off with you because you keep bringing up there are these things that are really exciting me. But companies that maybe you couldn't have seen a path to investing in even just a few years ago because it was just a little bit too early, and that might be a little contrarian, that might be a little unexpected, that you're very truly excited about.
Yeah. So I mean, this proliferation of launches and constellations, I think, has created a lot of opportunities to support the space ecosystem. So in one space that I think is very interesting right now is just coordination in LEO. So there's traffic. SpaceX is launching thousands of satellites into orbit. We've never seen anything like this before. There are lots of other constellations. I think the risk of debris, I think, is always interesting. I think that private companies popping up around providing real-time radar services for locating, SpaceX will send a ride share of satellites and you need to locate your satellites immediately. And the companies that are seizing on those opportunities, I think, are very interesting. So I think companies that are supporting and seizing the opportunity of all these constellations and launch vehicles is very interesting and exciting. I backed a company called K-Ham Space that's doing just this. They're a tool for satellite operators to coordinate and screen maneuvers and really just aggregate all the data so that they can make better, more informed decisions about where to how to maneuver, how to operate safely. So stuff like that I get really excited about.
Jory?
I mean, I think there's definitely a bunch of areas that are beyond Earth orbit that, when is the time going to come? In space, resource utilization, beyond Earth propulsion, definitely like nuclear, fission and fusion propulsion concepts. Those are being developed, and it's a matter of getting the timing right. But I find them really exciting.
Mark, you have a couple of really interesting ones we were talking about backstage, but maybe I don't want to make you talk about them. But one was climate focused and one was actually sort of visual analysis of leaf structure. Are those areas where you see the most opportunity, or some other area?
So what we're excited about is how space technology is going to help humanity. So we're interested in companies that are focused around climate, around sustainability, that are going to have a huge impact. So sort of sustainability as an example, one of our companies, AST, they've just put up the largest ever satellite into LEO, which is effectively a cell tower in space in order to be able to communicate with any mobile phone without any hardware or software adjustment. That's game changing. It's going to change the lives of people. It's going to lead to education, health, improving standards of living, and leveling out society around the world. Those are the kind of things that we like to invest into. But our sort of favorite areas are around climate and sustainability. So the company that you were just talking about there was a company called Taranis, an Israeli company, that what they do is they use drone data, collecting information about particular fields at the centimetre leaf level, looking at pest, disease, levels of nutrition. They then use that data to train the algorithms for the satellites, so they can then still use that data to actually identify issues within fields where they haven't applied the drone capability. And that, I think, is a really exciting breakthrough. And I think we're going to see that kind of solution in different markets that allows you to be able to achieve higher resolution from space. So certainly that's the kind of area that we're interested in. But again, the climate opportunities there's just so many of them. Another one that we've just invested into recently called Tomorrow.io, really trying to provide effective weather data so that it can be incorporated into the enterprise decisioning tools. These are big things where there's significant markets that we still haven't yet cracked as a society, where we think space is providing the answer and addressing these problems. So climate and sustainability is very much where we're focused.
Well, unfortunately, we're all out of time, but it's very interesting to see how, as a result of all the launches, now we're in this area of coordination and also climate sustainability and all these potentially future products. So thank you again for joining me on stage, and thanks, audience, for listening in.
Thank you.